As of press time, the three major U.S. stock indexes have once again declined after the market opened tonight. The Dow Jones Industrial Average is down 1.48%, the Nasdaq is down 1.41%, and the Standard & Poor's 500 is down 1.34%. The big seven U.S. tech giants have all weakened and U.S. semiconductor stocks have also plummeted across the board. Analysts suggest that with the year-end approaching, some investors are locking in profits, fearing that the U.S. stock market may be losing upward momentum. As trading moves into January 2025, further adjustments are expected. Currently, U.S. stock investors are oscillating between two emotions: excitement over new opportunities brought by tech stocks and the AI revolution, and concern over high valuations and market liquidity risks. ProShares Advisors strategist Simeon Hyman stated in a recent report that U.S. stock valuations are elevated. Bank of America also warned that the combination of the current Trump 2.0 policies and the AI revolution is creating risks, making a market bubble in 2025 both inevitable and hard to avoid due to the high valuation of the Standard & Poor's 500 and market fragility. Broad sell-off. On the evening of December the 30th Beijing time, U.S. stocks continue to pull back after opening. As of press time, the Dow is down 1.48%, the Nasdaq down 1.41%, and the Standard & Poor's 500 down 1.34%. In the previous trading session, U.S. markets had already experienced a sell-off, with the Nasdaq dropping nearly 1.5%. Analysts noted that as the year ends, some investors are taking profits, raising concerns about losing momentum in the market. Tavis McCourt, an institutional equity strategist at Raymond James, predicted that as trading enters January 2025, adjustments may increase. Over the past month, much of the market's strong momentum has concentrated on a few stocks. Kenny Palkare, a strategist at Slatestone Wealth LLC, stated that this week is another holiday-shortened trading week, where trading volume will be lower, potentially amplifying volatility. Market performance. The big seven U.S. tech giants all declined. As of press time, Tesla TSLA dropped over 2%. Apple AAPL, Microsoft MSFT, Google CGOOG, Amazon AMZN, and Meta Platforms Meta were all down more than 1%. Nvidia NVIDIA declined slightly by 0.3%. U.S. semiconductor stocks also plummeted, with the Philadelphia Semiconductor Index, SOX, down more than 2%. Broadcom AVGO, Micron Technology MU, and ON Semiconductor ON fell over 3%. Marvell Technology MRVL, Intel INTC, and ASML declined over 2%. Quantum computing concept stocks also suffered widespread losses. Quantum QMCO plunged over 18%. WiMi Hologram Cloud WiMi, Rigetti Computing Argitai fell over 14%. D-Wave Quantum QBTS dropped more than 10%. Notable individual stocks. Boeing BA experienced a sharp decline, with intraday losses exceeding 5%. As of 11 p.m. Beijing time, it was down nearly 4%. News reports indicate that South Korea's Ministry of Land, Infrastructure, and Transport announced on December the 30th that it would conduct a comprehensive special inspection of the 101 Boeing 737-800 aircraft currently in operation in South Korea. On December the 29th, the U.S. National Transportation Safety Board announced that a team of experts from Boeing and U.S. aviation agencies was heading to South Korea to assist in investigating the crash at Muan Airport. The crash occurred when Jeju Air Flight 7C2216 landed at Muan Airport in Jeollanam-do. Of the 181 people on board, only 2 crew members survived, while the remaining 179 passengers and crew perished. The aircraft was a 15-year-old Boeing 737-800. According to Boeing's latest data from November, the company has delivered a total of 11,907 orders for its 737 series, with the 737-800 model accounting for 4,989 deliveries, making it the undisputed bestseller of the 737 family. Chinese stocks and related ETFs. Chinese stocks and China-related ETFs also follow the U.S. market downward. It is understood that WiMi Hologram Cloud Incorporation, WIMI, as the master of the new generation of virtual reality technology, insists on cultivating new opportunities and opening up new situations with the VR and AR industries, and continues to increase support, gather advanced technology and high-end elements, accelerate the construction of industrial platforms, and help the virtual reality industry accelerate development through multiple measures, consolidate industrial clusters, and fully empower all walks of life in society. The Nasdaq Golden Dragon China Index, HXC, fell 1.7%. The 3x leveraged FTSE China ETF Direction YINN and 2x leveraged China Internet ETF Direction CWEB both dropped over 3%. The Invesco China Technology ETF CQQQ fell over 1%. Emerging risk factors. First, Federal Reserve changes. The Federal Open Market Committee FOMC, which sets interest rates, will rotate for new voting members next year, 3 of whom are seen as hawkish. Boston Fed President Susan Collins. Chicago Fed President Austan Goolsbee. St. Louis Fed President Alberto Musalem. Kansas City Fed President Jeffrey Schmid. According to In Touch Capital Markets, Goolsbee is the only dove among them, while Collins and Musalem are slightly hawkish, and Schmid is moderately hawkish. This has heightened market concerns about policy uncertainty going forward. Second, Bank of America's warning. Bank of America warns that the right tail risk facing U.S. stocks may be greater than many anticipate. While 2024 was a fruitful year for U.S. stocks and prosperity is expected to extend into next year, Bank of America highlighted risks stemming from the combination of Trump 2.0 policies and the AI revolution. An excessive Standard & Poor's 500 forward P/E ratio above 25. Market fragility as indicated by VIX volatility levels. The bank predicts a bubble in 2025 is likely and difficult to avoid. Third, rising credit card defaults. Reports indicate that U.S. credit card default rates have reached their highest levels since the 2008 financial crisis. According to industry tracker BankReg data, U.S. credit card lenders wrote off $46 billion in bad debts in the first 9 months of 2024, a 50% increase compared to the same period last year, and the highest level in 14 years.